Hi, Assalamualaikum. Today me and my group members Salma, Izzati, Shauki and Aiman are going to present about trade finance product offered by Kuwait Finance House. First of all, I'm going to share a bit of information about Kuwait Finance House. On May 8, 2005, Kuwait Finance House Malaysia Berhad became the first overseas Islamic bank to be licensed under the Islamic Banking Act Malaysia 1983. Their principal objective as the Asia Pacific Regional Headquarters of KFH is to provide innovative Sharia-based financial solutions to their consumer. Furthermore, they serve as an intermediary and facilitator for two-way investments and commerce between Malaysia, Asia and the Middle East. For your information, Kuwait Finance House was awarded as the best trade finance provider in Kuwait 2019. The award is another testament to the high quality of KFH goods and services, bolstering the company's position as the global leader in Islamic finance. KFH was chosen by the Global Finance highly experienced team following comprehensive consultations with bankers, corporate finance leaders and analysts around the world. KFH focus on core banking helped the company achieve the greatest level of efficiency and service quality while also providing competitive and innovative lending options. Customers can rely on KFH for advice and solutions to help them manage risk and succeed in international business.
So, for the first Kuwait Financing House Trade Financing I product is Murabaha Working Capital. KFH provided this product to their customers in order to help finance their purchase of trading goods that include raw materials and semi-finished product. We had already learned about Murabaha in the previous semester, right? So let's recap back what we learned. Murabaha is the sale finance based contract where it includes cost plus profit as agreed by both parties, seller and buyer. Typically, this contract enables the customer to take immediate delivery of the item and settle with the bank on the delayed payment arrangement after providing the appropriate information in the documentation. In general, the MWCF application form, commercial invoice, and transport papers such as bill of lading, airway bill, and delivery order are required in this product. Moving to the next slide, I will explain more about the benefit of Murabaha Working Capital Financing I. After doing some research, we found that one of the benefits for the customer is the selling price will not be influenced by fluctuation in the base financing. What it means from this statement, the customer will see the outstanding selling price of their financing as the imbued with the profit to be earned for the financing and always seen it as an expensive for them. Unfortunately, Mr. Muhammad Azli Ismail noted that Islamic goods under Kuwait Financing House, the bank will first advise consumer or customer on the outstanding selling price, which include the financing and earnings. Of course, they will normally provide a discretionary rebate on the selling price for early settlement, thereby wiping away the unearned profit amount. In other words, client will discover that the Islamic product is now on par with the traditional loan structure. For the major risk of this product, customers may not use any other trading facility in Kuwait Finance House if there is a failure or default of financing. The reason why KFH developed this practice is because the management risk team wants to reduce any risk that will occur in the future. So not to mention, when the customers start to not fulfill their obligation in the contract, the bank can retain the right to debit the customer's account and deposit account as a payment for overdue debts and will notify first the customer 7 days in advance. Besides, the bank also will approach the customer by restructuring a loan and give the customer a moratorium on payment after sending a reminder. However, if the customer doesn't cooperate with the bank, the security and collateral will be liquidated, which is known as security realization, or disposed of in the event of a Murabaha facility with the revenues used to certify the outstanding debt. Moreover, the bank also can maintain the right to demand the full payment of the invoice value and take legal action in the event of financing failure. So, that's all for Murabaha Working Capital Financing I'll pass the next slide to my friends.
So hi, moving on to the next product of Islamic trades financing in Kuwait financing house is so the short form KFH. So it's called shipping guarantee mean that it's guarantee the shipping firm for to the list of goods to the buyer or importer without the production of original bill lending. So as we know, when we receive or use the letter of credit or original bill of lending, so it requires some allocated time, or the process is quite long. So the importer are going to need more time to wait for the original bill of lending to be received, and then the goods are going to be allocated on the warehouse in the port, which they might receive an additional charge for the warehouse. So the shipping guarantee help to the importer to receive their goods, their products early when they arrive in their port. So normally shipping guarantee are related with the letter of credit from Murabaha. As for Kuwait financing house, they provide letter of credit Murabaha with the shipping guarantee because they believe that there might a chance that a customer will disappear with goods without signing the financial contracts. So that's why they try to convince the client to take two of the product related with each other, which is letter of credit from Murabaha and shipping guarantee. So there are three benefits who use the shipping guarantee from Kuwait finance house. The first of all, doesn't have any extra charges or you need to pay more, because so normally in the article from the Port Authority and Port Klang, so the authorities say that you're only given allocated 3 days. So when your ships arrive from the cargo, so they are going to hold your items or your goods, your products for about only for 3 days. So once you have been hold more time, so you need to pay more in order to get for them. But if you try to take the goods before the time of 3 days period end, so you doesn't need to pay any extra charge. So giving the shipping guarantee, you help for them to get the goods early, because you doesn't need to wait for original building, just request to the Kuwait finance house and just you will get the shipping guarantee. So and then so once you get your goods, your products early, so you get the advantage to recycle back your capital budget, mean that you can increase your capital circulation and decrease the capital spending, mean that you can value up, you can have the growth of your business, expand, gain more profit because you increase the capital circulation. Mean that because the reason behind is you getting the item released from the Port Authority early, then you gain the advantage for selling it early. So this kind of benefit related to each other. So the third benefit is the advantage of market opportunities, mean that because you become the one of the first importer to bring the product to your market, mean that you gain the market advantage or market opportunities to sell it early compared to your rival or compared to your competitive. So mainly that you are going to earn some extra move or extra opportunities because you sell them early. So more customers are going to attract to your product, to your market, because you provide the earliest one compared to the others. And then for the major risk in shipping guarantee, there is two, which is involving because the shipping guarantee doesn't have no expiry date, and because it doesn't have the expiry date, so the shipping guarantee, the SG, can't be cancelled once have been released to the importer or to the client. So the only way for the shipping or the SG to be cancelled is when the customer return their original bill of lading. Therefore, the SC are going to be cancelled. So the second major risk is about no sum limit or duration mentioned in the shipping guarantee in the SG. So for the Sharia perspective or the Sharia compliance, there are element of garah because we doesn't know what kind of amount that we're going to take, what kind of thing that being need. So the item or the good isn't being specified in the SG because there is no being mentioned the amount or the sum limit or the duration. So therefore is have a risk exposure in the case of exorbitant and reasonable claim for the shipping firm. So maybe a third party or an unresponsibility person try to claim more than they require. So this is all for me. So I'm going to pass to my partner next.
The trade finance product of KFH Malaysia is Documentary Collection I. Documentary Collection I is a way of channeling shipping document for import and export, where KFH Malaysia act as an agent bank to channel the said document to the intended recipient. The collection document could be either be document against payment or document against acceptance. Document collection widely accepted, especially for established relationship between buyer and sellers. It enables the customer to settle payment obligation to the seller, not under letter of credit. By using KFH Malaysia as a financier, the importer can monitor their cash flow management of a business by having a fixed rate business nature. Other than that, KFH Malaysia also provide up to 100% financing of invoice value. There are lots of advantages of documentary collection, and it can be categorized into exporters and importers. As for the advantage for the exporters, under documentary collection, the document will not be handed over to the importers unless payment or acceptance of a time drive has been obtained. Thus, the importer cannot clear the goods from the custom without the document. This gives a payment warranty to the exporters. Other than that, exporter also remain as the title of goods until the payment has been received. As for the advantage for the importers, documentary collection are less complicated than its counterpart, which is letter of credit. Documentary collection also are less expensive than letter of credit, thus making it advantageous for importers to use this type of trade finance product. Documentary collection also face risk, and it can be categorized into two, which is risk for the exporter and risk for the importer. As for the risk for the exporters may face with non-acceptance of document risk. This is one of the major risk factors in documentary collection for exporters. Under the current documentary collection rules, which are called URC 522, importers are not obligated to collect documents from their bank. Thus, when the cargo arrives at the importing country, buyers may not want to pay for the document and just simply left the goods unclear at the custom. Other than that, the exporter also face non-payment risk. The non-payment risk is the second most frequent seen risk factor in documentary collection. The non-payment risk in a documentary collection are available by documents against acceptance, and it will happen if the importer accept a time drive but be paying on maturity. As for the risk for the importer may face low quality goods shipment risk. This is the major risk factor for a documentary collection for the importer. Under current documentary collection rules, which are called the URC 522, banks do not check or control the document. As a result, the importer pay the document, but they did not know the quality of the goods, thus making the risk higher for the importer when they are utilizing the document against payment. Even when they are utilizing the documents against acceptance, The importer may be forced to pay for low quality goods according to the local law that govern the bill of exchange procedure.
Next, I'm going to present about KFH Bank Guarantee I. KFH Bank Guarantee is an irrevocable written guarantee issued under kafalah contract to ensure payment in the event of beneficiary claim. In essence, the bank acts as a guarantor. Generally, there are two types of bank guarantee. First is the issue of a commitment letter on behalf of the bank's customer to a third party, guaranteeing to cover financial damage caused by the bank's customer act of default. In most cases, the bond or guarantee is issued to meet performance commitment rather than financial obligation. Second is a guarantee letter issued on behalf of the bank's customer that payment would be made to a third party if the bank's customer fails to fulfill his obligation. The guarantee is usually offered to ensure that a financial obligation will be met rather than a performance requirement. The Sharia contract used is kafalah, which is guarantee, with ujrah or fee, which is a contract where the bank or the guarantor guarantees any claim, debt or obligation that must be met by a debtor, supplier or contractor in exchange for a fee. The product structure for the Bank Guarantee I is as follows. First, the customer requests bank to issue a Bank Guarantee I. The bank as a guarantor issues bank guarantee to the beneficiary as requested by the customer. Third, the beneficiary to claim the bank guarantee amount from bank for breach of contract by customer. Fourth, the bank pays the beneficiary for the guarantee amount claimed. And lastly, customer pays the claim guarantee amount to the bank. For the risk, when the bank receives a claim from a beneficiary as a result of the customer inability to meet an obligation, the bank verifies the claim's legitimacy before making payment. The bank may liquidate the customer's collateral or security in order to settle the claimant's payment. Customer will be responsible for any fees incurred. And for the failure to fulfill the obligation, when the customer fails to make payments due to the bank may charge tawid or also compensation on advance against guarantee as follows. First, for any failure on the customer part to pay any amount overdue that continues beyond the tenure of the bank guarantee or after judgment is obtained against the customer, whichever comes first at such rate per annum as determined by the bank from time to time, provided that the applicable compensation rate shall not at any time exceed the prevailing Bank Negara Malaysia Islamic Interbank Money Market, or also known as IIMM, rate on the outstanding principal of the Bank Guarantee I calculated on daily rest. And compensation shall not be compounded or by any other means recognised by BNM Sharia Advisory Council.
Assalamualaikum and hi. So I would like to proceed to the last trade finance product offered by Kuwait Finance House, which is the KFH Letter of Credit I. This product serves as concrete confirmation that the seller will receive payments for the goods or services imported by the customer. It is a letter given by Kuwait Finance House, the bank, to the seller at the customer's request and instruction to pay at sight or at a determined future date up to a stated sum of money within a prescribed time limit and subject to the presentation of specified documents. Generally speaking, the required documents in this product are the standard LC application form, a pro forma invoice, or purchase order. The KFH Letter of Credit can be issued under two Sharia contracts, Letter of Credit I, namely the Wakalah contract and Murabaha contract. When the applicants obtain all the shipping documents, they will instruct KFH Malaysia to debit their current account for settlement and payment to the supplier under the Wakalah principle. When they make use of this concept, KFH will be appointed as the importer's agent on behalf of the applicant. The applicant will then deposit the full amount of the LC with the KFH to fund the import transaction, and KFH will open the LC, And after the exporter has shipped the products and submitted the required documentation, KFH will remit the payment using the client's deposit and charge a fee, which we call as ujrah, for its services. Next, under the Murabaha principle, after receiving shipping documents, the products purchased might be financed under the Murabaha contract. In short, KFH Malaysia will serve as a financier for the applicant for the acquisition of the products, and KFH Malaysia will set up the letter of credit, and when the items are signed and the required documentation is submitted, KFH will pay the exporter with the bank's fund, and KFH Malaysia will then offer the item to the applicant at a selling price that includes the cost of the goods as well as a profit margin. Therefore, the bank can recover its cost and earn a modest commission for operating as an agent. Moving on to the next part, which is the benefit of the KFH Letter of Credit I. By utilizing this service, it is important to note that there are no further hidden prices or transit cost charges because KFH Malaysia only pays the seller upon receipt of documents. Aside from that, when KFH Malaysia works as the intermediary between the seller and purchasers, to establish a commercial transaction agreement, the bank will provide an efficient way of payment that will be in both seller and buyer's interest. Despite all these benefits, there is still some risk associated with this facility. For example, the current exchange rate may differ at the point of the buyer and seller contracting the sale and at the date of contract payment, which will result in a loss due to currency fluctuation. When this type of event occurs, the value of the foreign transaction changes and the risk increases when there is a longer period between entering into a contract or trade and settling it. Moving on to the next part that will explain the question of what if the bank fails to meet its obligations. According to the application form, if KFH Malaysia fail to pay the original amount, commission or other expenses on the due date, the customer is authorized to dispose of the goods in any way and at any time that the customer sees fit, as if they are the owner without requiring prior approval from the bank. To give a summary of everything that has been stated by my group members and me, Islamic trade finance has played an important role in facilitating international trade since the time of the Prophet. With the rapid pace of globalization, its role in bridging cross-national trade has grown even more important. The financial principles of kafalah, salam, istisna, and murabaha hold a lot of promise for fostering worldwide commercial partnerships. And KFH is one of the 100 financial organizations offering Islamic trade finance products, and it continues to expand globally. KFH has continued to offer and expand financial channels to meet the needs of its clients while maintaining parallel trading relationships. This is part of the bank's commitment to assisting all types of businesses and trade activities. That's all from us. Thank you and Assalamualaikum.